Hi, my name is Mike Laven. I'm the CEO of the Currency Cloud, and we will get to the Currency Cloud after a few minutes. Let me tell you a little bit about myself. I grew up on the East Coast of the United States. I currently live in England, and I've been living here for 25 or 30 years, so I'm an English resident. When I was about 18 years old in university, I left university and went off and lived in East Africa for 2 years. From that point on, I've been involved in international business or in international affairs in some kind of way. For about 10 years, I worked in the UN system in a variety of capacities, but all in Asia. Following that, I got into the world of high technology and software, and I've been in software and technology now for about 25 years, with the time split between London and San Francisco. So I have one residence in San Francisco and one in London. I've been involved with a series of startup companies in San Francisco, mostly in the finance area and financial technology, and then companies in London as well. Example, risk management. I started a company in risk management and derivative trading. I didn't know anything about risk management, derivative trading, but I understand how to build companies. Then another company in foreign exchange clearing, and another one in fixed income or bond trading systems. But again, not as a trader, but as a financial technologist. So I have a pretty long background in global business and in financial technology, both in California and in London and back and forth. In terms of education, I have an absolutely clear business education. I have a BA in anthropology from Wesleyan University, which I worked on when I was in East Africa. Following up from that, I have a master's degree in international affairs from what was a small collective cooperative graduate program on an alternative basis in Vermont in the US. And then following that, I have a degree from Harvard, but not in business, in education. So my business background has all been totally been in social science. And so 2 master's degree, international affairs and education, and a bachelor's in anthropology. Prior to the Currency Cloud, I was working in a company was called Triana, where we built a very large network of processing foreign exchange trades. And Triana, the technology came out of Israel, so it was based in Tel Aviv. The management was based in California, and the customers were based in New York and London. Ultimately, we were acquired by ICAP, a very large UK brokerage. And so we built the company from the ground up, and about 3 years ago, we were acquired by ICAP. I get quite bored inside a big company, and I had a cushy job inside ICAP, and it would have continued on and on for a long period of time. So I was then looking around for something that was, to get into something. There is a technical founder of the Currency Cloud, Nigel, who had worked in Dresdner Bank and had looked at the idea that small businesses aren't being served in terms of their foreign exchange requirements. Just through the London environment, I met Nigel. I had the skills of building companies. Nigel had the idea and had made some advancement in the technology. And we then started working together to fund the business. In other words, to raise some venture funds to get the business. The theory, or the concept at a macro level, is that as the world has much more interactive and globalized, if you look at even on a theoretical basis, global supply chains are massively fragmented, so that manufacturing is spread all over the world in smaller and smaller companies in smaller batches than it ever has been before. And the system, which means that there's more international trade. So the volume of international trade goes up each year, but it goes up coming from smaller companies in smaller transactions. The banking system is totally not set up to service that. The banking system is set up to service a big company that does a treasury transaction at the end of the month. So, and as I described my background, I sort of understand this intuitively, and my family lives all over the world. So the business problem is that there are more people and more businesses that need to do foreign exchange than ever before, yet the global structure has not kept pace with where the population is. Nigel had some technology, I had the broad concept. We got together, put together a company that could then sort of meet that requirement, and that's the birth of the currency cloud. So the 85% of foreign exchange transactions for businesses go through banks. And the banking system is quite well set up for a large multinational doing a treasury transaction at the end of the month. For that business, it's cheap, and they'll have a treasurer who will ring up the bank at the end of the month and get a very cheap rate and be able to, over the telephone, do a transaction. But the problem for small businesses is that they don't have a depth of personnel. And the question in terms of making multiple currencies or cross-border payments easy for people, it becomes a question of access. So it's not just a question of making it cheap, it's a question of access. And for access, that means a next generation of technology. This is where cloud comes in, where you don't have to install any software or any technology within your shop. But more important than that, access means that we need to provide to the small business in the UK the ability to make payments in Thailand, to make payments in Uruguay, to make payments in the US, to source goods from China, to source goods from India, to source goods from Russia, wherever they can, and to get the best prices for what they're doing, the simplest payments, but not to see any of the complexity. Because the world of global commerce is a world of tremendous complexity. Each country has its own rules. Each bank has its own protocol in terms of how it wants a number structured. When you send a payment to Australia, you need different numbers than when you send one to Singapore, than when you send one to the US. But a small business can't cope with all of that. It has to be very, very simple. So we structured the technology in such a way that we're a platform and we interface with multiple places to change money. In other words, we get the best prices. If we need an inventory of African currencies, we have a provider of African currencies so that we can have those at a reasonable price. If we need an inventory of Asian currencies, we need to go to a place where we can get those. And there's not a single provider globally who does everything. Additionally, we need to pay out into various countries. Again, there's no single place to go. So if you are sourcing bicycle parts from Thailand at the same time that you're sourcing tires from Italy, you might need to pay Thai baht and pay euro, and you don't have a single source that will get you the best price and the equal distribution in both places. So we had to build a platform that connected to the world financial system in a way that a small business needs, but to make it simple so that the small business themselves had none of the complexity, and it was just as easy as in the UK making a BACS payment, making a domestic payment. So that the technology issue becomes being able to connect to a very complex world and then to normalize that world for a small business and make it easy for the business to access it. And that's taken, in a sense, that's a cloud proposition because we are connecting to businesses throughout the cloud. It's taken a lot of work in terms of thinking through how to make a complex process simple and then presenting it to the customer. And it's taken a lot of understanding of what businesses are doing and how they need to transact and to make things simple. I mean, one of the important things about the world of payments is nobody likes payments. I mean, payment is a secondary transaction. If you are buying a house, you want the house, you don't think about the payment. If you're buying a meal, you're buying the meal, you don't think about the payment. So a payment is something that has to be simple, it has to be easy to access, has to be frictionless, and that's taken a lot of technology to deliver that simplicity to the customer or to the small business. So every day there are about $4 trillion of foreign exchange payments made. 3/4 or more of that is speculative trading on the part of businesses actually trading foreign exchange for profit. But 1/4 of that, somewhere between 500 billion and $1 trillion, massive amounts of money, represents cross-border flow of transactions. If you look at the fact that 85% of that goes through banks, and that banks are charging between 1 to 4 or even 8% on that, the amount of money that's being withdrawn from the world financial system by banks for foreign exchange of very straightforward transactions is tremendous. And there's no reason for it. In the capital markets, in the other portion, in that 3/4 of the $4 trillion a day, a hedge fund that's doing a $50 million foreign exchange transaction, they're investing $50 million in euro, they're taking $50 million out of Cyprus, 50 million euro out of Cyprus and putting it somewhere else, they'll pay $1 to trade $50 million. So why should they pay $1 to trade $50 million when you as an individual pay 8 to 10% to do $1,000? It's the same transaction. There may be in smaller transactions a small increment in terms of cost, but and once finance became digitized, the $50 million transaction and the $1,000 transaction actually are quite the same. They're just ones and zeros. They're both digital transactions. So what we've done in the Currency Cloud is we're taking the advances that have been made in the capital markets and in other parts of the financial system and bringing them down to smaller transactions. We think that's transformative in the sense that costs will come down dramatically. There are some servicing costs for smaller business, so maybe it's not going to be that small, but there's no reason why small businesses won't see their costs to do global business dramatically transformed. And if you think of it, this is a fairly standard internet play. In a sense, what you've got is a very long value chain of a transaction, you make a transaction, the money gets changed, puts in another bank account and gets paid. And in the way that happens in many other internet businesses, you disaggregate the value chain and then you start to squeeze parts of it and squeeze the profit out of it or squeeze the inefficiency out of it. The global payment market, a foreign exchange market, has a tremendous number of areas of inefficiencies. Inside a bank, for example, the corporate division might look after you, the payments division will make the payment, the foreign exchange group will handle the actual transaction, so you'll have 3 groups that'll service a simple transaction. The bank's cost for doing what should be a very simple and cost-effective transaction is very, very high. And there's lots of inefficiencies. And in the way of internet companies, what the Currency Cloud does is takes a very narrow piece of that and pulls it out and optimizes it. And then that optimization will then start to squeeze the costs out of the bank. I mean, listen, the banks will still be there when we're all done. And this is a huge business of hundreds of billions of dollars a day. But it's disruptive and transformative in the sense that it brings a new cost equation into an incredibly important part of global business. So to go back to the theme that I had before, if you look at a payment transaction, and remember, what's very important is payments are boring. No one likes payments. Payment means I'm taking my money and I'm giving it, I'm paying it. Okay, so payment is boring. But if you look at that transaction, starting from whoever is providing the goods, whether it's an e-commerce site or a buyer, and you follow the train of that transaction down to the supplier or a bank account on either side, there's a tremendous number of pieces in that. And each piece of that now has firms that have taken that out and are trying to optimize it. So there's now a whole range of mobile providers, okay, working on mobile payments. So they're really working where the consumer is interfacing with making a payment itself. There's payment service providers, PSPs, bigger companies who are working on how do you service the larger companies themselves. So there's at each point in the chain of the transaction, whether it's card companies, banks, and various different kinds of banks, companies that interface with the consumer or with the small business, interface with the supplier. There's tremendous numbers of people, firms, trying to optimize that, because there's a general sense on a global basis that, and this is not just cross-currency payments, but payments themselves are something that have been inefficient and that can be optimized. So in the US, you hear about Square, you hear about Stripe. In the UK, you hear about iZettle, you hear about Go Cardless, you hear about many, many firms that are optimizing different pieces of it, direct debiting, cardless payments, mobile payments, a whole variety of those things. Within that landscape, the currency cloud is going to do one thing. Remember, it's the it's the analogy of the hedgehog and the rabbit. I mean, the hedgehog and the fox, if you know that one. That the fox knows many things, and the hedgehog knows one thing. So we know one thing. We are focused only on optimizing foreign exchange payments as a piece of infrastructure within the whole world of payments. So though there are plenty of firms working on payments, whether it's mobile, whether it's corporate, whether it's banks, whether it's commercial, whether it's business, whether it's individuals, whether it's remittances, whether it's Dubai to the Philippines or London to Brazil, we only are doing one piece of that, and then we've developed our technology so that it's easy to use and easy to integrate, so that we will then fit in to all of the other payment firms and bring down the cost and make easier the world of foreign exchange. So we look at this large, complex landscape that's now been fully digitized, and we're trying to take out one piece of that. So for the currency cloud, for example, a lot of our customers are payment firms. So firms that are, for example, providing prepaid cards. It's another popular way of making payments. So providing in, whether it's Russia or Africa or even in Europe, instead of paying someone money into their account, basically putting money into their credit card. So funding the card rather than funding the account. We're helping firms that do that need to take, for example, if say you're a firm that's paying a series of consultants and employees globally from the US, but the way that you're paying them is funding a prepaid card. There's a foreign exchange transaction there, but suddenly there's a whole new payment mechanism, which is the funding of a prepaid card. We're helping firms that are doing payroll via prepaid cards to do that foreign exchange transaction. So again, it's a broad scope in payments. There's tremendous amounts of innovation going on as the global needs change, and we're only doing one piece. We're doing that little piece, but in a way that the technology integrates with everything else. In the month of March, Currency Cloud will do about $120 million of transactions, which that would be a rate of $1.5 billion a year. And I'm sure that as we're growing 10 to 20% a month, by the end of this year, we'll be at a rate of, a run rate of about $2 billion in payments a year. So, and what that $2 billion represents is businesses paying bills outside of their country at, I think if you do the math, probably between $5 and $10 million a day. And the customers of the currency cloud are both medium-sized businesses who make payments for themselves. It's about a third of the business. But the other two-thirds of the business are firms, corporate treasury firms, stockbrokers, wealth managers, financial advisors, accountants, who make business payments for their customers. So one of the reasons that it grows incredibly fast is because a large number of our customers are aggregating payments from other customers. So it's not so much that I deal with a small business, because after all, if you're a small business, you may make £50,000 of payments foreign a year. That's say £1 million a year. But if you're an aggregator of hundreds of those businesses, suddenly you can leverage very quickly. So the reason that we're going quite quickly is because we're a platform, because we're selling for the most part to firms that aggregate payments for other firms, we get tremendous leverage in the business. The typical transaction that goes through the currency cloud right now is between 30 and 50,000 pounds per transaction. And the typical business may make 1 to 2 payments a month, but an aggregator who aggregates hundreds of businesses may make hundreds of payments a month, each from 50 to 100,000 pounds. So in that sense, each time we bring on a customer, we're not just getting the business of that individual customer, we're getting the business of the multiple customers who interact with them. And also, if you think about it, there's one small customer that I like to use as an example who imports bicycles into the UK. Small company, £3 million a year. That's, when you think of it, is not a huge business in terms of bicycle importing. But bicycles all come from Southeast Asia. So though they're a very small business, a couple of people, a few shops, they supply other shops, almost all of their costs are based on foreign exchange. Or think of a fruit company, a company that imports fruit. Look around the UK, you're not getting tropical fruit during most of the year. Where does the fruit come from? The fruit in general is coming either from North Africa or it's coming from Southern Europe. So fruit's being paid for in Moroccan dirham, or it's being paid for in dollars or euros. So even a small company that's in the fruit business imports foreign exchange. We deal with firms that would then deal with multiple firms, for example, in the fruit business. So we get tremendous leverage in terms of what we're doing by letting other firms effectively market to consumers in specific segments, and we're selling to them. So we get a high amount of leverage in that. Also, because we focus on business payments, which are, as I said, 30 to 50,000 pounds, the volume that goes through our system starts to escalate very, very quickly. If you look at the, one thing that's quite popular is the remittance market. People sending money home to their family in Poland, sending money home to their family in India or Pakistan. Those payments tend to be very small, £1,000 and less. Business payments are 50 times that. So a few simple transactions start to escalate the volume on the platform. So the way that we are, one of the reasons we're growing very quickly is the strategy that we've chosen of being a platform and marketing to businesses who then market to other businesses, which gives us tremendous leverage through the channel. So I've been involved in the startup world, both in terms of deep technology. I came from a database background, and in financial technology for quite some time. London has two competitive advantages and two segments of competitive advantage. One is in financial technology, the other is in digital media. And the reason that is very simply is London is a global headquarters for the world of finance and also a global headquarters for digital media. I won't go into digital media right now, but I will talk about finance. So what does that mean? It means that there's a tremendous amount of expertise in London. there's a tremendous need. There's, in addition to the big banks, there's a series of smaller firms and smaller banks and wealth managers, so that the level of the depth of both people and of knowledge and of resources, whether it's in the bank themselves, it's in people who've left banks, it's in technologists, and it could be even in related industries. It's in industries that sell things to banks. In London is incredibly deep. So London becomes a very, very good place in the world of financial technology. So this is a great place for that kind of business. As the world of money gets digitized, so that the future of financial transactions is all digital, and we see that in almost everything we do in terms of credit cards and in terms of bank accounts, in terms of bank payments, then the application of technology to those problems becomes even more urgent. And so what you're seeing is whether it's big data or mobile technology or cloud computing, or you name the innovation, as the world of finance is a digital world, all of those innovations often come first into finance. One of the things for the currency cloud, or having been in financial technology, often the financial innovation comes to the consumer first. So, for example, online banking is a relatively old story in the world of consumers. We've been able to access our bank account and look at our accounts and watch transactions go through in retail and consumer banking for quite some time. The world of business and corporate banking lags way, way behind that. So the technology industry, whether it's in data or communications, has a tremendous impact on the world of finance. And it generally first starts, I believe, in the world of retail and consumer, and then eventually goes to corporate. London is a great place for that. Massive capital market, massive innovative thinking, lots of capital, lots of people, lots of technology, so this is a great place for that. Future of money, okay. When you talk about the future of money and the future, in some ways, of the financial industry, the thing to think about first is what happened to the music business. As music became digitized, and maybe it started with Napster and started with firms that were not necessarily legal, or BitTorrent, but as music became digitized, the whole world of music changed. Artists, instead of cutting a CD and selling 10 million, suddenly have to go out on the road and tour. So the digitization of music itself changed the landscape in terms of business dramatically. And I think you need to think of the future of money in the same way. To the extent that all financial transactions on a personal level become digitized, and our bank account has always been ones and zeros, but now every part of that landscape is become digitized, and the disruption that occurs in that becomes similar to that occurs in the music business. The new firms will be created. I think if we see in the US with Square, basically simple way to take card payments. Why is that? They have an iPhone, the ability to take a digital payment on the iPhone, total revelation. So that changes the nature of the financial transaction and is a direct impact of the digitization of every single financial transaction. So when we think of the future of money, the first thing to think of is the way that digitization makes all sorts of new services possible. Another one that we talk about, again, not the currency cloud, crowdfunding, lending, a whole series of different ways of looking at credit. And again, it's part of the same concept, that once all financial transactions become digitized, then there's different ways to approach each one of them. In the case of crowdfunding or crowdsourcing or lending, what you're doing is reorganizing the way that credit is given. So that that's a whole different approach to credit. There's then a series of firms that work in peer-to-peer finance, that look at if I need €1 million as a business and I happen to be manufacturing in pounds and you're manufacturing in euro and you need pounds, why should we go to the bank when we can just find an exchange and exchange them themselves? But it all comes back to the same concept, that once the transactions are all digitized and electronic, there's then different ways to organize the world than there were before. So part of the future of money is that as all transactions are electronic, as all electronic transactions are digitized, there's going to be all sorts of ways to organize the world that weren't before. I think one of the things that we were talking about before were virtual currencies or cryptocurrencies, Bitcoin. And Bitcoin is one of them. There's Ven, there's a whole series of others that are important in that way. Again, some of those currencies have problems with them now in terms of regulation and security, but I like to think of them as very much like Napster or BitTorrent. When the music business first digitized, it was somewhat outside the law. But we now have iTunes and Spotify, and they are direct descendants from the revolutions that happened in terms of Napster and LimeWire and all of the things that came over to the BitTorrent world. And so when I think of Bitcoin and those other virtual currencies, they have regulatory problems now and control problems that the banks don't particularly like, but they're charting a path of a series of anonymous currencies that are not controlled centrally and that are virtual. And I don't know where that's going to go, but the concept that there'll be other sources of stored value than what we get from our national governments, I think is a really important concept. And I think that the cryptocurrency world introduces that concept in its infancy, and I just have no idea where it'll go, but it'll go somewhere. I mean, you see, remember, Facebook had Facebook credits. There's a massive market, global market, in terms of the secondary trading of cell phone minutes. So there's cell phone minute arbitrage. Well, that's just another currency. So there's a whole series of things that occur in the world right now that are cryptocurrencies that go beyond national markets. And again, that's part of the same digitization issue. So future money, total digitization, transactions get democratized, new sources of value, new themes happening all the time. I think one that is talked about a lot is M-Pesa in Kenya, is known as a global leader. But again, it's very much a similar issue where you had a not developed local banking system so that you could actually leap without the infrastructure directly into mobile banking. So where, to the extent that M-Pesa has been a global leader in mobile payment, suddenly you have an economy that is dependent on mobile banking and really digital finance without having to go through the other stages. I think you're going to see that going in a lot of places as well. So I guess there's three themes in that. One is digitization, mobile, democratization, and then thirdly, new sources of value and where those value will come from. And I think the whole point about it on Future of Money is we don't know. In that sense, it's quite exciting. One point to talk about in that, which is important, is the banks will always be with us. Is that, you see that, actually you saw that this week with the haircut that the EU and the IMF tried to give to the citizens of Cyprus by taking their insured deposits. There needs to be a fundamental trust in the world banking system that it's going to be there. And we depend on the banks to run the global financial infrastructure. In very much the same way that we don't think about the fact that British Telecom runs the phone lines or British Rail runs the rails. And that infrastructure needs to be owned and managed and be secure by somebody. But everything that interfaces with the consumer, whether it's a business consumer or a retail consumer or you in your home, doesn't need to be with the banks. So the banks aren't going away. There's a massive role for that trust that we put in the financial system to be secure, but anything that that system does where it interfaces you and business and consumers, that will all change as well. And that's part of, again, the digitization in the future. There'll be the infrastructure providers, and banks will be there, and national governments will certainly be there to be secure, but everything else will be a free-for-all. And I think that's where we're looking forward to now. 30 years ago, there was a lot of sociological writing about recent urbanization. And back when I did my degree, and actually it was in African history, all things, there was a lot of work on urbanization in Africa, and people looked at, in various third world countries, people who came in from rural areas and came to the city. And the predominant Western way of looking at that was that these people had to be confused. That they had to be, that the clash of cultures, of the clash of modernity and old cultures, that the clash of urban and rural civilizations had to make people confused. And that was the Western way of looking at it. But actually, when you talk to the people themselves, they weren't confused at all. They knew exactly what they're doing. So I actually think that one can look at these macro trends and try and say, well, all this stuff is confusing, that society doesn't know what it's doing, morals are falling apart, finance is coming down. I find that perhaps more over-intellectualizing things. I think when you start to talk to people and talk to kids, and you talk to young people, they're not confused at all. Or if they are confused, they're no more confused than they were 50 years ago. They have the same level of confusion. So that the extent that social media and digital trends, whatever they are disruptive, and they may be disruptive, I actually think people just grow up, accept them, and move on. And the concept that the world itself may be coming to an end, it isn't going to come to an end. But institutions as we know them may transform. So that's always sort of frightening. So when I look at those things, I always think of it as much more hopeful than that. When the trend that I think maybe we were trying to go to as we bring it back to the theme of the currency cloud is, I'll just tell the story of one of my children. My daughter lives in Singapore. She works for a European firm and gets paid in euro. Her husband is a Canadian, and he actually works for an American firm and gets paid in Singapore dollars. They have savings and will ultimately have their life both in Canada and the US. So on a daily basis, they deal with multiple currencies and multiple countries. And yet everybody they know deals in the same way. When you walk around central London, the melting pot of people is dramatic. At a wholly different level, if you look at the growth of the US immigrant population, of people who, and the US has always been an immigrant society, and okay, what previously was European, now it's Latin American. Who knows who it'll be in the next generation, but it's always going to be somebody. All of that interconnectedness creates a global kind of interdependence that I think is a wonderful thing. In my business, it creates money going back and forth, so it creates cash flow. but in addition to creating cash flow, I actually look at that as something that's hopeful. I know there's one way to look at it and say, oh, these things are going to cause global chaos, but the likelihood of India stopping being India after 1,000 years of westernization and multinational corporations is pretty low. And so I think one shouldn't worry about that. One shouldn't worry about that. One should actually look at it on a much more hopeful basis. So in terms of your question, are we involved? Will there be financial crisis? Yeah, of course there'll be financial crisis. But there's probably always going to be some kind of financial crisis. I think that kind of stability may be elusive, but the extent that global populations move around, individuals manage to accommodate that, I think, better than governments do. And so I look at all of these things as hopeful. I think that the innovations in social media, in different ways to relate, get accommodated easily by people. I think that they'll ultimately be probably less transformative than their people who propose them want. But all from my perspective, all of those are good things and just create nothing but opportunity. So when I look at my own business and the technology parts of my business, and you see all this incredible creativity and people thinking, and especially in people who are in their, say, 20s and 30s, whose life experience has grown up with the belief in a digital economy and in a way of approaching technology and things like that. I see nothing but, innovation and entrepreneurship and people trying to figure out solutions that are going to be appropriate in the modern world. So I'm not to say I'm not worried, but I have a tremendous faith that just gets reinforced all the time that clever stuff is going to figure it out. Maybe naive, okay? But that's how I look at things.